Palantir and Nvidia are two of the hottest artificial intelligence stocks investors can buy right now. But which one is the better investment for long-term investors? That's the question I'm going to answer in this video by comparing Nvidia and Palantir stock head-to-head on critically important financial metrics, including revenue growth and cash flow from operations to sales ratios. I'll also share with you my proprietary valuations for Palantir and Nvidia. I calculated discounted cash flow valuations using my proprietary model to calculate a fair value for each of these companies. I'll also compare these two on valuation metrics, including the forward price to earnings ratio, to get a more comprehensive idea about valuations comparing these two AI stocks. So without further ado, let's jump into the details.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first thing I wanted to compare these two companies on is revenue and revenue growth. And this chart really demonstrates the difference in size of these two AI companies. Palantir only generated $3.4 billion in revenue in the trailing 12-month period. But given its popularity, you would think the company is generating more sales. That growth has been phenomenal, though. Palantir's revenue has increased from $600 million in 2018 up to $3.4 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 31%. In recent years, however, Palantir has accelerated revenue growth as the company has found a way to penetrate enterprise business. It's always had great success with the United States government in signing contracts with the U.S. government and other U.S. government institutions, and it's also had success with allies of the United States. It's had more difficulty penetrating business, and the reason for that is its services are so expensive. Nobody argues that Palantir has the best-in-class AI service that incorporates your company's proprietary data to give you better decision intelligence. But the reason why more businesses are not signing up with Palantir is because it's so expensive. Very few businesses in the world can afford its services, even though almost every business in the world would appreciate having Palantir on its side. Palantir boasts less than 1,000 enterprise customers. And that's amazing considering that there are millions of businesses in the world and less than 1,000 are customers of Palantir, the best-in-class service of a category that almost every business wants to make investments inside. So recently, Palantir has made great strides by making its service more approachable and more affordable for more businesses. And it hasn't done very much in terms of lowering its price, but it's done a lot in the way of demonstrating what it can deliver and thereby justifying that large investment from enterprises. I expect more of the same from Palantir as business opportunity is massive for its services. Meanwhile, Nvidia has grown its revenue from $11.7 billion in 2018, soaring to $165 billion, and you can see from 2022 the demonstration of how phenomenal Nvidia's growth has been, accelerating from $27 billion up to $165 billion. Of course, in late 2022 is when OpenAI launched ChatGPT, which unlocked these hundreds of billions of dollars in investments in artificial intelligence in the data centers that are optimized for AI, which incorporate NVIDIA's products and services, including its accelerated computing products, the GPUs, combined with the software library that's really increasing the effectiveness of NVIDIA's products. NVIDIA reported quarterly financial results just a few days ago, and the management team reiterated how strong demand for its products and services are. The company's revenue growth exceeded 50% again, even though it's decelerating. It's still really, really strong, especially when you consider the scale NVIDIA is operating. Its revenues are over $100 billion on an annualized basis, and it's still growing at these levels, which is unheard of among its peers in companies that are this size. The next metric I wanted to compare these two AI stocks on is the operating cash flow to sales ratio. Now, a couple of things stand out here. For one, Palantir has improved on this metric phenomenally in recent years. Its operating cash flow to sales was negative 27% at the worst, and that's improved to exceed Nvidia at 50.3%. A operating cash flow to sales number at 50% is extremely good. It's among the best of all of the companies that I'm following. So a number of 50% is very strong. But to make that number look even better is the trend line improvement with Palantir. How much it's improved is also impressive. Nvidia boasts an operating cash flow to sales number of 46.6%, and that's up from 31.9% in 2018. Nvidia's number also continues to improve, and one thing that's been a catalyst for Nvidia is that phenomenal growth rate, allowing the company to dominate the industry and generate economies of scale that brings down the cost per unit produced. Additionally, Nvidia has ramped up to a new technology in the first 2 quarters of its fiscal year, and the management team says that the gross profit margins are likely to improve over the next few quarters and next few years. Nvidia commands premium prices for its products because it's at least one step ahead of the competition, probably even 2 steps ahead of the competition. It boasts an estimated market share of between 80 and 90% in the data centers optimized for artificial intelligence. So now that we compared these companies across critically important financial metrics, let's look at valuation according to my proprietary discounted cash flow models. For Palantir stock, the price to intrinsic value ratio looks unfavorable for investors. The intrinsic value I calculated for Palantir is just under $45. The current market price is $156, suggesting that Palantir stock is considerably overvalued. And I've been saying that for a few months now, how Palantir stock has been overvalued. Just in this last month is when Palantir stock has hit some headwinds after reaching a 52-week high of $190. Palantir stock price is down about 20%. It's now trading at $156 per share. Meanwhile, I calculated an intrinsic value per share for Nvidia stock at $159 compared to the current market price of $174. Applying my margin of safety, the stock looks fairly valued according to my proprietary DCF framework. Back to the charts and looking at valuation on a forward price to earnings basis. By the way, all of these charts are from fiscal.ai. They are my preferred data provider. You can get access to their services with the link in my description. If you use my affiliate link, you'll get a discount. Palantir is trading at a forward price to earnings of 211 compared to Nvidia was trading at a forward price to earnings of just 30. Palantir is trading at almost 7 times the valuation of Nvidia when measuring by the forward PE. So either measuring by the forward PE or my proprietary DCF, Palantir stock looks extremely more expensive than Nvidia. Now, while I would agree that Palantir might deserve a premium valuation over Nvidia, given the larger opportunity Palantir has ahead compared to the opportunity Nvidia has ahead, considering the size of Nvidia compared to the size of Palantir and the revenue growth opportunities for Palantir compared to the revenue growth opportunities of Nvidia. Still, I don't think Palantir deserves a 7x premium to Nvidia. So for that reason and valuation reasons, I would say this is an easy decision for me. I would pick Nvidia over Palantir, and I have. I own Nvidia stock. I bought it earlier this year, and I'm not interested in owning Palantir stock at these very high valuations. So Nvidia would be my choice as the better investment for long-term investors. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.